Welcome to the FinGlam Finance channel. In this video, we will be reading and discussing some articles that we found very interesting. Feel free to leave a comment. Let's start reading the first article. A few days ago, there was a lot of buzz on the internet about the possibility of SEC Chairman Gary Gensler resigning after an internal investigation. The news came from a single source, which wasn't even a credible one. However, due to the prevailing animosity towards Gensler in the crypto industry, the news quickly spread and some media outlets even reported it as true. As it turned out, the news was completely false, which was confirmed by Fox Business Network correspondent Charles Gasparino. Using an AI-generated text detector called ZeroGPT, it was discovered that the majority of the news article, about 96.8%, was actually generated by an artificial intelligence tool. The problem lies in the fact that AI tools, including popular ones like ChatGPT, lack the ability to verify the reliability of sources. They simply assume that if information comes from what they perceive as a reliable source, it must be true. Unlike competent journalists, they don't verify sources or seek confirmation. In this case, there was no official confirmation of Gensler's resignation from the SEC. A government agency like the SEC wouldn't hide such a significant development without facing serious consequences. Therefore, the absence of official confirmation should have raised doubts about the news. Some newspapers that reported the alleged resignation labeled it as a rumor, indicating that it hadn't been confirmed. The main mistake made was the failure to verify the original source, which turned out to be an AI-based text generation software, not individuals with direct knowledge of the situation. This incident highlights the fact that AI-generated fake news can be misleading. The AI software used in this case didn't have the ability to select reliable sources, which raises concerns about its programming. It's unclear where the software drew its information from, but it clearly lacks the ability to differentiate satire from real news. Experienced journalists, however, were quick to recognize the lack of confirmation and didn't believe the news. They understand the importance of verifying information before reporting it. Unfortunately, the quality of journalism these days often falls short, with many incompetent individuals spreading news without proper verification. For the average person, distinguishing between real and fake news can be challenging. This is where AI-generated fake news poses a problem. Most people don't have the expertise to verify news stories themselves, making them vulnerable to misinformation. On the other hand, experienced journalists are equipped to identify fabricated news from confirmed and verified information. They have developed the necessary skills to navigate through the noise. To protect yourself from being misled by AI-generated fake news, it's essential to rely only on sources that you trust and disregard information from dubious or unknown sources. It's always better to err on the side of caution and seek out reliable sources for accurate information. This was the text of the article, and now we will be commenting on it. The spread of fake news is a concerning issue, especially when it involves high-profile figures like SEC Chairman Gary Gensler. It's astonishing how easily false information can be disseminated, even by AI platforms. The lack of source verification and confirmation by these AI tools is a significant problem. This incident emphasizes the importance of critical thinking and independent verification. It's crucial not to blindly trust information just because it comes from a seemingly reliable source. In the age of AI-generated content, we must be cautious and rely on trusted sources that have a proven track record of accuracy. Experienced journalists play a crucial role in filtering out fake news from verified information. They possess the skills and expertise to conduct proper source verification, a practice that seems to be lacking in many instances. However, it's disheartening to see that journalistic quality is often compromised, leading to the spread of unchecked news stories. The impact of AI-generated fake news extends beyond the realm of experts. For the average person, it becomes challenging to differentiate between real and fabricated news. This highlights the need for media literacy and critical evaluation of information. We must empower ourselves to question the sources, verify the facts, and make informed judgments. Moving forward, it's essential to be vigilant and rely on trusted sources. We should be cautious of unverified information, especially when it comes from unfamiliar or unreliable sources. AI technology should be refined to ensure it draws from reliable sources, and users should be educated about its limitations and potential pitfalls. In a world where information is readily available at our fingertips, it's our responsibility to navigate through the noise and seek out accurate and verified information. Let's stay informed, question what we encounter, and be discerning consumers of news. Now we will read and comment on another interesting article. Bitcoin investment products have seen a significant increase in money flowing in, totaling $310.6 million over the past 2 weeks. Institutional investors have been particularly focused on Bitcoin during this time, as the cryptocurrency continues to reach new highs in 2023. According to CoinShares, Bitcoin-related products accounted for the majority of inflows in the crypto product market. In fact, 98% of all digital asset flows in the past 2 weeks were directed towards Bitcoin, making it the primary choice for investors. This marks a reversal from the previous 9 weeks, which experienced consecutive outflows. Additionally, there was a minor outflow of $0.9 million in short Bitcoin products over the last week. Interestingly, this is the second time this year that Bitcoin products have accounted for such a large portion, 98%, of inflows into cryptocurrency investment products. This surge in Bitcoin's popularity and dominance can be attributed, in part, to the recent filings for a spot Bitcoin ETF by BlackRock and other major financial institutions like Fidelity, Invesco, WisdomTree, and Valkyrie. Since these filings, the price of Bitcoin has risen by 25.2% to $31,131 at the time of this report. Bitcoin's dominance, which measures its market cap relative to the total market cap of all cryptocurrencies, now stands at 51.46% according to available data. In contrast, Ethereum investment products experienced inflows of $2.7 million last week, marking the second consecutive week of inflows after a period of outflows. During an interview with Cointelegraph, Fireblocks CEO Michael Shalov highlighted the significant interest from institutional investors in core assets like Bitcoin and Ether, while interest in alternative cryptocurrencies remains relatively low. According to Shalov, there is a strong belief that Ethereum will play a crucial role in future tokenization ecosystems, as it is likely to be the foundation for Ethereum Virtual Machine (EVM)-based projects. On the other hand, the narrative around Bitcoin is less specific, but most investors recognize the value of holding this cryptocurrency in their portfolios. This was the text of the article, and now we will be commenting on it. Bitcoin investment products have been on fire recently, attracting a staggering $310.6 million in inflows over the past 2 weeks. It's clear that institutional investors have their eyes firmly set on Bitcoin, as it continues to reach new highs in 2023. According to CoinShares, Bitcoin has remained the top priority for investors, with the past 2 weeks accounting for a whopping 98% of all digital asset flows. This is a significant shift from the previous 9 weeks of outflows. Even short Bitcoin products saw a minor outflow of $0.9 million in the last week, which is not surprising considering the overall bullish sentiment towards Bitcoin. It's remarkable to see Bitcoin products dominating the inflows into cryptocurrency investment products for the second time this year. This surge in popularity aligns with the recent filings for a spot Bitcoin ETF by major players like BlackRock, Fidelity, Invesco, WisdomTree, and Valkyrie. These filings have undoubtedly played a role in driving up Bitcoin's price and market dominance. Since the ETF filings, Bitcoin's price has skyrocketed by 25.2%, currently sitting at an impressive $31,131. Moreover, Bitcoin's dominance in the overall crypto market has climbed to 51.46%, which further solidifies its position as the leading cryptocurrency. While Bitcoin takes the spotlight, Ethereum investment products have also experienced positive inflows of $2.7 million last week. This marks the second consecutive week of inflows for Ethereum, breaking a streak of outflows. It's worth noting that institutional investors show a significant interest in core assets like Bitcoin and Ether, but the same level of enthusiasm seems to be lacking for alternative cryptocurrencies. According to industry experts, Ethereum's future looks promising, as it is expected to play a crucial role in tokenization ecosystems, particularly those based on the Ethereum Virtual Machine (EVM). On the other hand, the narrative around Bitcoin remains more open-ended, but most investors acknowledge the importance of having exposure to this leading cryptocurrency. Overall, the influx of institutional investment into Bitcoin is a clear indication of the growing mainstream acceptance and recognition of its potential. As the cryptocurrency market continues to evolve, it's fascinating to see how Bitcoin and Ethereum, the two giants of the industry, shape the landscape for investors and pave the way for future developments. We are excited to share this information with you and create a community dedicated to financial growth. Let us know your thoughts in the comments as we continue to explore the vast world of finance together. Subscribe to our channel to stay informed and feel free to share and comment on all our videos. Thank you for your support. Attention! The information provided in this video does not constitute financial advice and is not intended to provide any form of financial guidance. The opinions expressed in this video are personal and may differ from those of financial experts. Any decision you make regarding investments will be your own decision. We do not intend to influence your decisions in any way. If you decide to undertake any investments, we recommend consulting professionals in the field. Before risking your financial capital, conduct your own research. Financial markets can be highly volatile, so if you choose to invest, do so with caution. It is important to be aware that financial transactions are often risky and can result in the loss of your entire invested capital. Never invest more than you can afford to lose. Past performance is not indicative of future results. Financial knowledge is essential. Be aware of your goals and abilities before investing. Conduct thorough research and verify sources before making financial decisions based on this video.